So I'm very pleased to be able to welcome Raj Grover, founder and CEO of High Tide. High Tide has built the nation's largest corporate-owned store network with 153 retail stores located across the country. The company has experienced spectacular growth, with revenues now closing in on $500 million annualized, the highest run rate cannabis sales in Canada's cannabis industry. The growth has largely been driven by the company's unique discount club model, which has seen his market share increase more than twofold, approaching 10% of share of all retail sales outside of Canada. With that, I'm happy to turn the presentation over to Raj to tell us more about High Tide and the remarkable success you've been having to date. Raj, please go ahead.
Thank you so much for that awesome intro, Peter and Andrew. Appreciate the opportunity to present to everyone. Good afternoon, everyone. My name is Raj Grover, and I'm the founder, president, and CEO of High Tide. Most of you are probably very familiar with the High Tide story, but for our new friends joining us today, I'll start by providing a brief overview of our company, including our latest quarterly results that we just reported a few days ago. And then we can open it up to Q&A, and I'll be very happy to answer all your questions. High Tide operates in three main business segments, THC, CBD, and consumption accessories. High Tide is a retail-focused cannabis company with global operations. We have a very uniquely diversified cannabis ecosystem, which includes our flagship brand, Cabana. So we have 153 locations in Canada today, operating across 5 Canadian provinces. We are the largest non-franchise cannabis retail chain in Canada, operating in Ontario, Manitoba, Saskatchewan, Alberta, and British Columbia. We also have Cabana Club as one of the largest, in fact, the largest loyalty program in Canada that includes 1,040,000 members of the Cabana Club. I believe that's about 14 or 15% of the marijuana smoking population outside the province of Quebec. We also recently launched the first of its kind in November of 2022. We launched the first of its kind paid membership program in cannabis, which is called Cabana Elite. And we've already signed 13,500 Elite members, which are paying us a subscription fee of $30 a year for the first year. And that'll go to $60 a year from their second year to continue enjoying the premium benefits that we are offering to our Cabana Club members. We also own and operate 3 of the top tier international CBD brands, 2 in the US, 1 in the UK. New Leaf Naturals and Fab CBD are based out of the US, and Bless CBD is a top selling CBD brand in the United Kingdom. All of the CBD brands are direct to consumer online businesses, so they're asset light businesses, with the exception of New Leaf, which is also a CGMP certified facility to manufacture CBD products. And then we go to our accessories business. High Tide also owns and operates 3 of the top 5 consumption accessory platforms in the world through Grass City, Smoke Cartel, and Daily High Club. These are some of the most searched online platforms for cannabis accessories, consumption accessories on the planet, which we intend to use very wisely when federal legalization takes place in the US and in the states that are going to be allowing online cannabis sales. So as you can see, we have been reporting accelerating revenue and EBITDA numbers practically right since our inception. In just 4 short years, we've gone from roughly $8.5 million of annual sales to almost $500 million in annual sales today, as we just reported $118.1 million quarter, which was also our 3rd consecutive quarter of record revenue and record adjusted EBITDA. We also reported adjusted EBITDA of $6.6 million as our Q2 numbers. That just came out on March 15th. Oh, sorry, that just came out on June 15th, excuse me. And this was also 174% of an increase in adjusted EBITDA year over year and 20% sequentially, which is, as you all know, an extreme rarity in Canadian cannabis or amongst Canadian cannabis retailers. Our average same-store sales continue to lead the country. We are now up on our last reported quarter. Our daily average same-store sales were up 5% quarter over quarter, and they were up 30% year over year. And since we launched our innovative discount club model about a year and a half ago, or almost 2 years ago now, we are up over 100% in our same-store sales trajectory, which is again an anomaly in Canadian cannabis. So here you can see we have 153 locations in the country. Alberta is our largest market with 77 bricks and mortar locations. We have approximately 30 stores in Calgary, and the rest of the stores are all over the province of Alberta. Ontario is our second largest market by brick and mortar footprint, but our largest market by revenue, where we have 49 stores in that market. Our long-term goal is to get to 250 stores in Canada. So we have a ton of growth still ahead of us. We are taking a bit of a pause on our aggressive growth strategy just to ensure that, in these very trying times in the capital markets, where all cannabis companies are feeling capital constraints, we can start generating free cash flow ahead of our peers and become self-reliant, so we are not overly reliant on cannabis capital markets. And the good news is we are practically there, which I'm happy to share later on in the presentation or through the Q&A format. Our stores are also a very differentiated retail experience, as they're very open and have a very retail-friendly layout. Cannabis customers, when they walk in our stores, or our club members, they get really excited because they can see all of the cannabis products displayed wall to wall, whether it's accessories, whether it's CBD products, whether it's THC products, you can see the actual product. Now, again, we are restricted to give those products and let them hold those products in their hands, but at least it's a very open and inviting retail experience, similar to other industries, very different or opposite from the rest of the industry on how they've been doing things in Canada and the US, where they simply have, large stores with 2-3 monitors, and you look and stare at the monitors and you order your product at the counter. That is not our model. Our members love the way we serve them, and that is a big reason of our success. We also carry some of the widest and the largest selection of cannabis, THC, and consumption accessory products in our stores. We carry up to 1,000 SKUs in our stores, which is not typical of a Canadian cannabis retail business. Typically, you see 300 to 500 SKUs. Maximum I've seen is 650 SKUs in one of our competitors. So we definitely lead the country on that metric of selection as well. One more thing I can quickly add, just to give you all a bit of an idea on how we look at brick and mortar stores. So we are very focused on cost control, et cetera, and we've been constantly trying to bring down what it cost us to build our stores. So currently we are spending, for a typical store that is 1,500 square feet, that is kind of the sweet spot for us for a Cabana location. We spend about $300,000 on these stores as a CapEx, which is still very, very minimal when compared to our LP friends who have to shell out a lot more dollars to build out those facilities. But that is not the case with retailers, and I did want to point that out to everyone. So on this slide, you can see our innovative discount club model that we launched in October of 2021. I think this was our most important strategic decision that we've taken in High Tide, and it's paying dividends today. Our discount club model offers unbeatable prices, unbeatable selection, and has been able to quickly accumulate 1,040,000 Cabana Club members, which is a massive amount of customer loyalty that we've garnered, and this loyalty base continues to grow. It's also exceeded my expectations. We were expecting to be close to 750,000 members, which would still by far be the largest brick and mortar loyalty program in the country. But we've already exceeded 1 million members, and it continues to grow. So very exciting news for our business there. We've also ventured into white label products through our Cabana Cannabis co-brands, which I can walk you through on another slide. But we are really trying to create that Apple-style closed ecosystem where, once you're a customer, you are going to shop with us for consumption accessories, but because you just can't find those deals elsewhere. And the same with cannabis products, the same with CBD products. And we are serving our customers through some very exciting ways and technologies, which again, I'll share in some other slides. So as you can see, very proud of this accomplishment. We have exceeded our own expectations in terms of same-store sales growth. Our same-store sales are up a massive over 100% since the launch of the discount club model, while the national same-store sales average, or all sales excluding Quebec, total sales, not just same-store sales, were only up 15%. So this paints a really good picture on how quickly our concept is rising and how quickly we are accumulating cannabis customers across the country. This is a very important slide and a very exciting slide. You can see that Canna Cabana is now approaching almost 10% of the total retail market in Canada. And we have done this with just 4.5% of the total brick and mortar store count. So total Canna Cabana locations, which are 153 stores, amount to 4.5% of total brick and mortar store count, excluding the province of Quebec. And we are already hitting close to 10% market share, retail market share in the country, which is an aspirational number for many of our peers. But for us, 15% is very much within reach. We don't think that it's going to take us too long in the future to hit that milestone. And it may even go higher than that. But I'm a firm believer of under promising and over delivering, and we think we can definitely reach a 15% market share in Canada. Our stores in Ontario, which is our largest market by revenue, is doing 3.5 times the revenue of our provincial peers in that province. And in Alberta, where we have the largest brick and mortar store count, which is 77 stores, we are doing over 2 times the revenue than our peers in that province. And then it's a similar story in Manitoba and Saskatchewan as well, including British Columbia, where we just started opening stores in June of 2022, but it continues to be accelerating sales, accelerating revenue every single week over week. So we rolled out the first of its kind paid membership program in cannabis, which was always the plan when we launched our innovative discount club model. And now we already have 13,500 members subscribed to this premium offering, and this number continues to grow. This number was 9,500 when we reported our Q1 results, and it's gone up 42% since, and we don't see this slowing down. We continue to sign more and more elite members because we continue to offer them exclusive benefits such as elite flash sales, limited edition accessories, limited and exclusive elite branded products. And it's just for $2.50 a month currently. So it's very, very affordable. We are taking care of our customers in these very high inflationary times, so they can try and test this program, and we know they will love it. And from the second year onwards, we can collect $60 a year from our members going forward. This is also a very high margin stream for High Tide, for Canna Cabana. This is north of 70 to 75% gross margins that we yield out of this program. So it remains to be a very exciting margin enhancing opportunity for us. Thank you. So in June of 2022, we started, because we have the size and scale in the country, we have 153 locations across 5 Canadian provinces. And now it makes perfect sense to start introducing our own white label brands. Although I would like to point out challenges still exist because you can't transfer stock between provinces. Alberta still does not allow white label, although we are in conversations with the provincial government here that just like all other normal industries, it should be allowed. It is under consideration, and we believe that it could be the case by the end of this year, which will provide a great margin enhancing opportunity for us. And it'll provide a very good opportunity for all operators in the province as we be able to differentiate our products even more. But currently, we have 13 white label SKUs in the market, which range from infused pre-rolls, ounce bags, vape cartridges, edibles. We have all kinds of products, including a new leaf natural products that we've introduced in the prairie provinces of Manitoba and Saskatchewan, as well as in the province of Ontario. They continue to do very well, and we have more offerings planned for the rest of this year and throughout next year and a few years beyond that, to get to 25% of all of our in-store offerings reflect white label products. which is our Cabana Cannabis Co. and other house branded products. White label products also offer us an opportunity to increase our margin by roughly 5%, an extra additional 5% margin, which goes a long way in the Canadian cannabis retail landscape. So this is another very exciting piece of technology that we acquired through a purchase of a retail store in Ottawa, Ontario. We already have this technology equipped in 120 of our locations. We are going to install this in each and every one of our stores, but we have a goal to get to free cash flow positive by the end of this calendar year, which we are very excited about. So we've taken it a bit more slower because this is part of our sustaining capex. So we are just pacing it out, but this technology is super exciting. Our customers are very excited about it. Our staff is very excited about it. This technology is catalyst to expected faster transaction times, increase average basket sizes, lower overhead and labor costs. As you know, the labor line is one of the most expensive lines to manage in North America and Europe, and this technology greatly helps with that. The exciting part is that we also have a lot of inbound leads coming into us from the US market for dispensaries that are looking to install this technology. We are first looking to have this installed across our network because we are still working on acquiring more hardware, and then we are still working on acquiring all the data that we can get so we can properly, accurately price this offering in the United States and beyond. But this remains another huge margin enhancing opportunity for us, and also a cost controlling opportunity for us. Similar to our SG&A expenses, I'd like to point out, our SG&A has come down to roughly 5% of revenue, down from 6% of revenue quarter over quarter, and down from 7% of revenue a year ago. So, we are very focused on cost controls, and together with all of these elements of Elite, White Label, and Fast Tender, we believe that we can continue doing a better job in managing our margins and reducing our costs. Andrew, I hope I've timed this well. We have 10 minutes left for Q&A, so hope that works.
Done beautifully, Raj, and looking forward to our chat now. So thank you for the presentation. I think I want to start off with maybe a high-level question on this discount club strategy, because there's a slide just earlier where we saw the performance of High Tide's market share before discount club was implemented and afterwards, and obviously market share has just taken off, and it's been a very successful strategy for you. Same store sales growth, I think, peaked at just over 50% year over year. Even in the most recent quarters, 30% year over year. So those are pretty incredible growth rates. Why, if the model's been so successful, why do you think more retailers haven't tried to replicate it? Why is there a moat around this model, or why do or why haven't we seen more companies adapt to this model? Why is that in your view?
Well, thanks for this great question, Andrew. Love to answer that. So, we have always catered to our own ecosystem and our own strengths. And I've said this from the very beginning. And every time I speak to investors, it's the same response, that we've had a very diversified, uniquely diversified cannabis ecosystem, where we also have our international CBD brands that we sell online, and also our accessories business, which we are able to mass produce overseas and then sell into markets, not only just in Canada, but beyond as well. So when we have our discount club model, it's feeding off all of these elements. We've been retailers since 2009. We started with Smoker's Corner, which was accessory shops. We had 19 accessory shops at their peak that we converted into cannabis retail, but we really leveraged our accessories model even in those accessory shops. So we knew coming into the business, our strength was accessories. So what we did, Andrew, is we cut off wholesale in Canada strategically just to launch this model properly. And we started discounting accessories to up to 80% off, because we manufacture all of these accessories. How many independents or small regional chains or large players you can think of that do this? None. None that I can think of or say that they are doing it in Canada or even in the United States. So this is a unique edge that we've had in High Tide that we've leveraged very, very well. Same thing with CBD products. When you have high margin products that are yielding 50, 70, 80% gross margins, and you're fighting for, four-wall margins in Canada here, which are now climbed nicely to 20%, but still way below our MSO friends in the United States. you must think creatively on where you can get that additional margin to, continue getting this market share. And hence our market share is climbing because we were not desperate to keep our prices where we needed to keep them and still yield good results and still have accelerating EBITDA, still have accelerating revenue dollars. And basically, we are standing at that free cash flow break-even level today. And this wouldn't have happened if all of these elements did not come together. So simple answer is no one else has this ecosystem. This is very, very proprietary to High Tide. We already had 245,000 members of the Cabana Club when we launched the discount club model. And because we leveraged that membership base, today we are over 1 million members. And I can't think of anybody else with the Fire and Flower saga unfolding. They had close to 500,000 members. And I don't see anybody else that's even remotely close to our numbers now. So it's a very, very unique proposition to High Tide.
That's great and very helpful. And also just a reminder to the audience, if you do have questions, feel free to submit them through the Q&A. One more here, and I'll see if there are any audience questions in that chat. It's obviously been a very tough market in Canada. It's been evidence that it's been a competitive market for Canadian cannabis retailers. And yet, here you are reporting your 13th consecutive quarter of positive adjusted EBITDA. Just what did you learn from competing in Canada that you think will be relevant to international market opportunities as those emerge? What's the key kind of takeaways from your strategy as you look overseas potentially?
So Andrew, I always say this, Canada has made us battle hardened, right? Like I was not expecting that we would be talking about 20% four-wall gross margins, but on the opposite end of it, still have 13 consecutive quarters of positive adjusted EBITDA, right? So we have always been a very operationally focused company, right since our inception, right since Smoker's Corner. We've launched many businesses along the way very successfully. And we've always, despite the noise in the capital markets, and especially the cannabis capital markets, we've remained focused, head down focused on our business, and we continue to yield these results. I can't wait to get to the US and get to other international markets where our peers there are enjoying, north of 50% gross margins. Add our diversified cannabis ecosystem, companies are going to find it quite tough to compete with High Tide. This is a prediction I'm willing to make. This is something that I've said publicly that, our long-term ambition is to be a top 5 multi-state operator in the United States. And if we can do this in Canada by being very focused on our operations, by understanding our business really well on how all of these pieces fit together, we feel we can do exactly the same in US and beyond.
Great. And question from the audience from the Q&A function. It asks whether you foresee liquidations or challenges with some of the LPs in Canada, but I'd actually even broaden that to include both the LPs and other retailers, and whether this offers High Tide opportunities to capitalize on the challenging environment out there, maybe through gaining power over your suppliers or potentially being able to execute on M&A with other struggling retailers. What opportunities do you see in the challenging market environment?
Yeah, absolutely. So we have been in consolidation mode for quite some time now. It's not a new thing, Andrew, as you know, but consolidation is picking up steam. As you know, even some of the most well-capitalized operators that you could call them, with having the backing of some groups that are seriously capitalized, even they couldn't hold on to their cannabis operations because it all, again, goes back to, do you understand your business well? Are you operationally a very, very sound business? And unfortunately, a lot of the groups that have got into cannabis, some were just, a lot of backing from the capital markets and knew how to raise capital, or just a dream about opening a cannabis store. Unfortunately for the independents, look, I was an independent, so I feel their pain, but there has to be a concrete, solid business plan. There needs to be a contingency plan for the what ifs that we are experiencing in cannabis. But fortunately for High Tide, Andrew, it opens up a lot of opportunities for us on a weekly basis, on a monthly basis. Sometimes I get offered, here are keys, Raj, could you buy our store? And, you find out they're doing $1,000 a day or $1,500 a day. My threshold to look into purchasing a store starts at $5,000 a day or a $1.8 million store. And unfortunately, I have to tell them no. And then they say, we're just willing to give you the keys because we're losing our shirt. And I'm like, I still can't take it because then I'm I'm acquiring a lease liability from you, which I have no interest in, right? So you're going to see a lot more bloodshed than what we've seen so far. Alberta's had negative store growth for 6 or 7 consecutive months now. Ontario has had crested store growth. It's not moving anywhere, despite now Mississauga coming in. It's very much flatlined. So this presents, and I believe because of this 5-year anniversary of legalization coming up, many of these leases were signed 5 years ago. And now folks have to decide, what are we going to do? Are we going to mortgage get another mortgage on our house? Are we going to refi this situation? Are we going to try it out for another year or two? Or just put our hands up and get into something different? And that is starting to happen left, right, and center, which presents a very, very good opportunity for High Tide. We're going to remain very disciplined on that, Andrew. We're not going to jump on every opportunity, but we're absolutely very seriously evaluating everything we're doing.
And just very quickly, because we only got 30 seconds here, what kind of valuation multiples are you seeing in maybe a more distressed and challenged environment?
So look, we were the consolidators in space. We have been for a very long time. We have 153 stores in the country, out of which roughly half and half were acquired and half were built. And we did some of the most accretive acquisitions in the Canadian cannabis industry at averaging the EBITDA multiples at 3.5 times. And now we are looking at things for 2.5 times. And if it's not absolutely interesting, we would still not be pressing the trigger there, right? Sometimes it's going even lower, like we bought the Choom assets in bankruptcy proceedings or CCAA proceedings last year, and we paid a 3.5 or 3.6 multiple of EBITDA. And those stores have tripled for us in revenue. In some cases, have quadrupled for us. So we are finding these very good deals out there, and we are not even paying what we were paying previously for these businesses.
That's great. Well, Raj, thank you very much for joining us today. Always a pleasure to catch up, and thank you for your presentation. It sounds like business is going very well for the company, and we look forward to continuing to follow along.
Appreciate the opportunity, Andrew. Thank you so much for having me.
Great. Thank you, Raj.